Good day girls. In this session we are going to discuss about working capital management. In this working capital management, first we are going to learn about what is meant by working capital and operating cycle, calculation of the operating cycle, and we are going to learn about how to compute working capital requirements. First, operating cycle. What is meant by operating cycle? Operating cycle is a time duration for conversion of cash into cash. So, it is the time required from investment of cash in some asset and conversion of it again into cash. This is known as operating cycle. In other ways, we can also say operating cycle is the time from the beginning of the production process to collection of the cash from the sale of the finished product. This is known as operating cycle. So, now we are going to discuss about the operating cycle in a diagrammatic way. So, cash is converted into raw materials is converted into work in progress converted into finished goods converted into sundry debtors converted into bills receivable turned into cash. This cash to cash cycle is known as operating cycle for the manufacturing concern. So, this operating cycle can be determined with the help of the formula. So, calculation of the operating cycle we can find it out with the help of the formula. So, already we have discussed we will be having raw material, work in progress, finished goods, credit period allowed to the debtors, that is debtors, then creditors, to find out the operating cycle. First, raw material held in stock. This we can find out with the help of the formula average stock of raw material divided by raw material consumption into 365 days. 365 is nothing but total number of days in a particular year. Next, work in progress we can able to find it out with the help of the formula average stock of work in progress divided by production cost into 365. Next, finished goods held in stock. Formula for this average stock of finished goods divided by cost of sales into 365. Next, for debtors, formula accounts receivables or debtors divided by sales into 365. Next, average credit period allowed by creditors, accounts payable divided by purchases into 365. So, next we will see the problem to find out the operating cycle. Here they have given calculate operating cycle of a company which gives the following details related to its operations. The information provided by the company is raw material consumption per day per annum is 8,42,000. Annual cost of production given is 14,25,000. Annual cost of the sales given is 15,30,000. Annual sales is 19,50,000. Additional information given is average value of current assets held is raw material, work in progress, finished goods and debtors is given. The company gets 30 days credit from its supplier. All sales made by the firms are on credit only. You may take 1 year as equal to 365 days. So, here we have to find out the operating cycle. So, we will be having the formula to find out the operating cycle. So, with this help of the formula, we are going to find out the operating cycle. So, first we have to calculate for raw material held in stock. So, raw material held in stock formula is average stock of raw material divided by raw material consumption into 365. So, in this sum, how much they have given average stock of raw material? Average stock of raw material here given is 1,24,000 divided by raw material consumption per annum given is 8,42,000. So, 1,24,000 divided by 8,42,000 into 365. So, raw material held in stock we can able to get 54 days. Next, work in progress. With the help of the formula average stock of work in progress divided by production cost. Average stock of work in progress here they have given 72,000 divided by production cost. Total annual production cost given is 14,25,000. So, 72,000 divided by 14,25,000 into 365. So, we will get 18 days on an average. Next, finished goods held in stock formula, average stock of finished goods divided by cost of sales into 365. So, average stock of finished goods given here is 1,22,000 divided by cost of sales. Annual cost of sales given is 15,30,000. So, 1,22,000 divided by 15,30,000 into 365 days, we will get 29 days. Next, credit period allowed to debtors. Formula is debtors divided by sales into 365 days. Here debtors they have given 2,60,000 divided by annual sales here given is 19,50,000. So 2,60,000 divided by 19,50,000 into 365. So you will get 49 days. So total current assets days is 150, that is 54 days plus 18 days plus 29 days plus 49 days, you will get 150 days less creditors. So creditors, in this sum they have given the company gets 30 days credit from its suppliers. So number of days for the creditors already it was given, so we no need to calculate with the help of the formula. So 150 divided by 30, 120 days, that was the net operating cycle period for this company. Next sum, the following information is available for Swahat Limited. Average stock of raw material and stores is given, average work in progress, average finished goods, average accounts receivable, average accounts payable is given. Next, average raw material and stores purchased, average work in progress value of the raw material per day is given. Next, average cost of goods sold per day is given and average sales per day is given. So you are required to calculate duration of the raw material stage, duration of the work in progress stage, duration of finished goods stage, duration of the accounts receivable stage, duration of accounts payable stage, and duration of the operating cycle. So this is particularly we are going to calculate operating cycle. So same what we have done in the previous problem we are going to do. First we have to calculate raw material stage. So raw material stage, what is the formula for that? Average stock of raw material divided by raw material consumption. What is the average stock of raw material given here? So average stock of raw material and stores given here is 200 millions. So 200 divided by average raw material consumption. Here raw material consumption with the help of the information average raw material and stores purchased on the credit and consumed per day here given is 10. So 200 divided by 10. So we will get 20. Next we have to find out work in progress. Work in progress formula is average stock of work in progress divided by production cost. So average work in progress of inventory here given is 300 divided by production cost. Production cost here they have given average work in progress value of the raw material consumed per day 12.5. So 300 divided by 12.5 you will get 24 days. Next, finished goods held in stock formula, average stock of finished goods divided by cost of sales. So average stock of finished goods. So here they have given as information average finished goods inventory 180 divided by cost of sales. Cost of sales here given is, that is average cost of goods sold per day is 18. So 180 divided by 18 you will get 10 days. Next, credit period allowed to debtors. So formula for this accounts receivable divided by sales. So accounts receivable, average account receivable here given is 300 divided by average sales per annum is 20. So 300 divided by 20 you will get 15. So total current assets is 69 less creditors. Creditors formula is average accounts payable or creditors divided by purchases. Here the average accounts payable given is 180 divided by purchases. Purchases here they directly not given. So what we have to assume, average stock of raw material consumption per day is 10. So 180 divided by 10, 18. So current assets minus current liabilities, 69 minus 18, you will get net operating cycle period 51 days. Next sum, the following information is available in respect of Amla Limited. stock holding raw materials 1 month, work in progress 15 days, finished goods 1 month, debtors collection period 2 months, time lag in payments of bills is 45 days. You have to calculate operating cycle, number of operating cycle in a year assuming a 360 days a year, average working capital required if annual cash operating expenses are rupees 180 lakhs. So, in this sum we need not to calculate operating cycle with the help of the formula. Straight away they have given the operating cycle number of days for each and every concept, that is raw material, work in progress, finished goods, for everything they have given number of days. So, raw material 1 month we can assume it is for the 30 days. So, operating cycle, current assets minus current liability, same concept we are going to follow, that is raw material plus work in progress plus finished goods plus debtors minus creditors equal to operating cycle. First we are going to calculate that. So, first they ask you to find out the computation of the operating cycle. So, operating cycle is nothing but raw material plus work in progress, finished goods plus debtors minus creditors. So, raw material is 1 month. So, 1 month we can assume it as a 30 days plus work in progress here given is 15 days. So, 15 days. Next, finished goods they have given 1 month, 1 month is nothing but 30 days. Next, debtors collection period they have given 2 months, 2 months is nothing but 60 days. Next, time lag in payment of bills is nothing but the creditors. So, 45 days here given minus 45 days. If you calculate you will get 90 days for operating cycle. Next, they are asked you to find out the number of operating cycle in a year assuming a 360 day year. Formula is number of days in a year divided by operating cycle. So, number of days here we have to assume 360 days divided by operating cycle. Now, we have calculated 90 days. So, 360 divided by 90 you will get 4 cycles. And finally, they are asked you to compute average working capital required if annual cash operating expenses are rupees 180 lakhs. So, this we can find it with the help of the formula. Average working capital required is annual cash operating expenses divided by number of operating cycle. So, annual cash operating expenses they have given is 180 lakhs. So, 180 divided by number of operating cycles, 4 cycles. So, 180 lakhs divided by 4 cycles equal to 45 lakhs required by the company for the average working capital requirements. Next, we are going to see the working capital requirements. Here are the format to compute working capital requirements. Usually, working capital requirement is nothing but current assets minus current liabilities. Under current assets, we will be having the stock of raw material, work in progress. Under work in progress, raw materials, direct labor and overheads. Usually, raw material we have to consider 100%, direct labor and overhead we have to consider as 50%. Next, stock of finished goods, debtors less current liabilities. Under current liabilities, creditors if there is any lag in payment of expenses, if there is any other current liabilities we have to deduct. So, current assets minus current liabilities our working capital. Additionally, we have to add if there is any contingencies we have to add it. So, finally, we will get net working capital requirements. Next, we will see the sum for calculation of the working capital requirements. So, Kamath Limited is engaged in customer retailing. You are required to forecast its working capital requirement from the following informations. So, information given by that company is projected annual sales 6,50,000, percentage of the net profit on cost of sales is 25%, average credit allowed to debtors is 10 weeks, average credit allowed by creditors is 4 weeks, average stock carried in terms of the sales requirement is 8 weeks, add 20% to allow for the contingencies. How we supposed to calculate the working capital requirements? Working capital requirement is nothing but current assets minus current liabilities. If there is any contingencies, we have to add the contingencies. Finally, we will get net working capital requirements. So under current assets, we have to consider stock of raw materials, work in progress, finished goods, data. Okay. Here they have given information is, particularly they have given percentage of the net profit on the cost of sales, they have given 25%. So projected annual sales they have given 6,50,000. So initially we have to calculate cost of sales. So cost of sales is nothing but 6,50,000 divided by 125. Why 125? 100 plus 25%, 125 into 100 equal to, you will get 5,20,000. 5,20,000 as cost of sales. With this information, we are going to find out the stock value and debtors value. Okay. Stock. So for the stock, they have given average credit period allowed to the debtors 10 weeks is given, and average credit allowed by the creditors is given is 4 weeks, and for the average stock carried in terms of the sales record 8 weeks. So stock, for the stock they have given 8 weeks. So here they have given weeks. So in a year we have to assume 52 weeks a year. So 5,20,000 for the stock, 5,20,000 into 8. 8 is nothing but the 8 weeks it was given divided by 52. So for the stock you will get 80,000 as value. Next for the debtors, they have given 10 weeks. So 5,20,000 into 10 divided by 52, 1 lakh rupees. So we will be having only two details under current assets, stock and debtors. So if you add stock 80,000 plus debtors, you will get 1,80,000 less current liabilities. For the current liabilities, creditors it was given 4 weeks. So 5,20,000 into 4 divided by 52, you will get 40,000. So working capital, current assets minus current liability, you will getting 1,40,000, that is 1,80,000 minus 40,000, 1,40,000. Next we have to add the contingencies. So in this sum, add 20% to allow for contingencies given. So we have to add 20% from the working capital. So far we have calculated, that is 1,40,000 into 20%, you will be getting 28,000. So we have to add 1,40,000 plus 28,000 is our working capital requirements. Total working capital requirement by that Kamath Limited is 1,68,000. So working capital requirement we can able to identify with the help of the current assets minus current liability formula. So here they have given only information regarding to the current assets is stock and debtors. Under current liabilities they have given creditors. So current assets minus current liabilities, contingencies they have given 20%. If you add the contingencies, you will get total working capital requirement of a particular company is 1,68,000. Next we are going to calculate working capital requirements with the following information. Assuming a year of 50 weeks of 5 days each, calculate working capital requirement from the following data. Sales 1,50,000 units at rupees 1 per unit on credit. Customers are allowed 60 days credit. Production cost, raw material rupees 0.50, labor 0.20 and expenses 0.25. The production cycle is 20 days and all materials are issued at the commencement of each cycle. Credit allowed by supplier is 50 days. Cash required 1 quarter of the remaining current assets. So stock levels they have given is raw material 40 days of supply, finished goods 20 days of supply. So they have also given that ignore work in progress, that is work in progress is not given. So we have to find out working capital requirements. Working capital requirement is nothing but current assets minus current liabilities. Under current assets we have to consider raw materials, finished goods, debtors and cash. Under current liabilities we have to consider creditors. So we will discuss the solution. Statement showing working capital requirements. Current assets. So raw material they have given. So raw material value they have given 0.50. So the sales, total sales they have given is 1,40,000. So 1,50,000, the sales, total sales given is 1,50,000. 1,50,000 into 0.50, and stock level for the raw material they have given 40 days. So 40 divided by 250. Why 250 we are considering is, so they are asked you to assume a year of 50 weeks of 5 days. So 50 into 5 you will get 250 days on a whole. So here raw material 1,50,000, 0.50 into 40 days divided by 250. So you will get 12,000. Next, finished stock. For the finished stock, we have to consider 1,50,000. This finished stock is nothing but raw materials plus labor plus expenses. So 0.50 plus 0.20 plus 0.25, on the whole you will be getting 0.95. So clear girls? So raw material 0.50, labor 0.20 and expenses 0.25. On the whole you will be getting 0.95. So finished goods is the comprises of the raw material, labor and all those expenses. So 1,50,000 into 0.95. For the finished stock goods they have given 20 days of the supply. So into 20 divided by 250, 11,400. So total 23,400. Next for debtors. So for the debtors, again the sales volume 1,50,000 into 0.5. For the same finished goods total value we have to consider here 0.95 into total number of days you have to consider 40 plus 20, 60 days. 60 divided by 250 you will get 34,200. Next, for the cash, one cash requirement what they have given is 1/4 of the remaining current assets. So 1/4 of the remaining current assets. So 1/4 of the remaining current asset is nothing but 57,600. 57,000, out of that 57,600 into 1 divided by 4 you will get 14,400. 57,600 is nothing but 23,400 plus 34,200, you will get 57,600. From that you have to find out 1/4 is nothing but 1 divided by 4, you will get 14,400. Total current assets value is 72,000 less current liabilities. For current liabilities, we have to consider credit allowed by the supplier is 50 days. So 1,50,000 into 0.50. 0.50 we have purchased raw materials. So raw materials is values 0.50. 1,50,000 into 0.50 into 50 divided by 250 days, you will get 15,000. So current assets minus current liabilities 72,000 minus current liabilities 57,000. You will get net working capital of rupees 57,000 for this company. Okay. Next sum we are going to see for the RLG Limited. So in this sum they are given from the following estimates of RLG Limited, you are required to prepare a forecast of working capital requirement. Estimated level of production is given. Then cost per unit, raw materials rupees 90, direct labor rupees 40, overheads rupees 75 is given, and selling price per unit rupees 265 is given. Raw material in stock on an average for 1 month. Materials are in process on an average 2 weeks. Finished goods in stock on an average 1 month is given. Credit allowed by supplier is 1 month. Time lag in payment from debtors 2 months. Lag in payment of wages 1.5 weeks. Lag in payment of overheads is 1 month. All sales are on credit. Cash in hand at bank is expected to rupees 60,000. It is assumed that production is carried on evenly throughout the year. Wages and overheads accrued evenly, and a period of 4 weeks is equivalent to 1 month. So for the few details they have given in weeks, for few details they have given in month. So what we have to do is we have to assume all those things as weeks. So 4 weeks equivalent to 1 month. So 1 month is nothing but 4 weeks we have to consider. Same working capital requirements we have to find out with the help of the current assets minus current liabilities. Current assets we have to consider stock, work in progress, finished goods, debtors and cash, all those things we have to consider. So solution, statement showing working capital requirement. So current assets, under current assets we have to consider stock. For the stock, the expected level of the production for the year they have given is 15,600. Cost per unit of the raw material given is 90. So 15,600 into 90. Raw material in stock on an average for 1 month is given. So 1 month is nothing but 4 weeks. So 15,600 into 90 into 4 divided by 52, you will get raw materials value on stock 1,08,000. Next, work in progress. Under work in progress, we have to consider raw material, direct labor and overheads. So raw material again 15,600 into 90. So here the material are in progress on an average for 2 weeks is given. So 15,600 into 90 divided by 2 divided by 52, 54,000. Next, for direct labor, 15,600 into 40 into 2 divided by 52 into 50%. Already we have discussed, for the raw material we have to consider 100% and for the direct labor and overhead we have to consider 50%. So for the direct labor 15,600 into rupees 40 into 2 divided by 52 into 50%, you will get 12,000. For overheads, so overheads 15,600, overheads cost is 75. So 15,600 into 75 into work in progress held is 2 weeks, 2 divided by 52 into 50%, you will get 22,500. So total work in progress value is 88,500. Next, for the finished stock. So finished stock is nothing but raw material plus direct labor plus overhead, all those costs we have to add it out. That is 90 rupees plus 40 rupees plus 75 we have to consider. Okay. So for the finished goods 15,600 into 205. 205 is nothing but 90 plus 40 plus 75. For the finished goods in stock on an average for 1 month. So 1 month is nothing but 4 weeks. 15,600 into 205 into 4 divided by 52, you will get rupees 2,46,000. Next, for the debtors, 15,600 into 205, same finished goods rupees we have to consider 205 into how many weeks for the debtors they have given. Time lag in payment from debtors is given is 2 months. 2 months is nothing but 8 weeks. So 15,600 into 205 into 8 divided by 52, you will get 4,92,000. Next, for the cash in bank they have given 60,000. So we have to add 60,000. So total current assets you will be getting 9,94,500 less current liabilities. So under current liabilities you will be having time lag in payment from debtors 2 months, time lag in payment for the wages 1.5, time lag in payment for the overheads it was given. So debtors already we have calculated. Here credit allowed by the supplier 1 month. So here we have to consider credit allowed by the supplier. So time lag in payments 15,600 into 90 into 1 month is nothing but 4 weeks, 4 divided by 52. So you will get for time lag in payment for the creditors is 1,08,000. Next, time lag in payment for wages. Wages it was given 1.5 weeks. 1.5 weeks nothing but 1.5 divided by 52. So for wages 15,600, direct labor amount is 40. So 15,600 into 40 into 1.5 divided by 52 weeks, 18,000. Next, time lag in payment for the overheads. So for overheads it was given 1 month. 1 month is nothing but 4 weeks. So 15,600 overhead cost is 75 into 4 divided by 52, you will get 90,000. So 1,08,000 plus 18,000 plus 19,000 current liability value. So total amount is 2,16,000. So current assets minus current liabilities 7,78,500. That is our total net working capital. Okay, so far we have discussed how to calculate operating cycle and how to determine the working capital requirement. Thank you, girls.